Hello, it's Mark here. I'm gonna go through the usual charts and sectors, and I'm gonna talk about the market just a little bit. And let's get to some of these stocks that are actually still really moving up here. Like we got these biotech stocks that are there's a lot of big moves. I was going through my scans. I was going through my stock fetcher scan today, as I always do every day, and I was going through these momentum stocks, and there's just a lot of biotechs that showed up, and I sorted by RSI on those in my Momo scan. I call this my under one Momo scan because it's well it's always stocks that are really low price, so like a filter by stocks between sub penny to $10, and they're usually pretty low priced. So like today, there's a lot of interesting things, and like one of the crazier things I saw today was this yellow roadway YLQ is broke out today, and it was just flagging, and that one's up from like 2 to 5. So that may be a short because like I'm pretty sure that one's like actually that's it's either the railroad or the paper, but it's a cyclical company from my memory. Yeah, trucking. Yeah, trucking. It's a yellow corporation trucking. So it's a trucking company, which is about as risk on as it gets. And risk on's just like kind of term they use when people are buying stocks. In other words, like when the market's going up. So when the market's going up, it's risk on. So this one's like it's the epitome of almost one that's gonna always go up when the market's up, and but they just didn't stop buying it on the past week. So it's it is OTC, so that's probably got something to do with it. It trades on the OTC or the pink sheets. It looks like it's a OTC bulletin board, but that's kind of weird to see. You don't see that much. That'd be like today if like you know if I'm trying to think if like Toyota was up today, and that was the only car company up, because the trucking sector probably wasn't up today. Like I haven't checked it, but the I really doubt that transports were green today. So that was one of the crazier things I saw in my scans. But the other things I saw, of course, were a lot of these small cap bio stocks just still breaking out. Like, well, the Rewalk Robotics, I actually found that one a long time ago, and they had really good growth. Like, I'm not sure, I haven't done a lot of in-depth research on it, but the growth was really good. At least it looked really good back then, like a year ago or so, and that one's got potential. It was one of the ones I just looked at a bunch of smaller companies with good growth in like the tech or robotics space. But I looked at a lot of companies, small companies with growth around that time. When the market was starting to heat up last year. So yeah, the CLSD is interesting too. The CLSD Clearside Bio, it broke out today, like really strong. Um, a lot of these are biotechs that are moving today. Like there's another one, Sana. I didn't even see that one. SANA. Um, it finished as a breakout. It might have even been a yeah. It looks like it could be a new trend starting. This one's kind of slow, and well, back there it had a pretty good run though. So I may have to add that one too. But it doesn't really trade. Like the technicals are kind of choppy here, and it looks like it's not the typical momentum stock that I like to trade. Um, yeah, the GLYC, that was one of my picks from the other week, and GLYC was up again 11% today. new breakout. Like a lot of these, the selling, I mean, the buying just hasn't stopped on a lot of these biotech. There's even more of them too, like the AKBA. The AKBA is a good one. I mean, it's clearly in an uptrend here, and you kind of just ride the trend until it dies with these biotechs. Like you can see, every time it uptrended, yeah, it went pretty well, you know, on the uptrend, and then once it breaks that uptrend, they fade out for a while. So this, yeah, this the AKBA is a good one too. I'm about to add that one to the watch list. So I've got a pretty substantial biotech watch list now. We'll see if I can even fit it on there because I've got so many on there now. Yeah, I think that's the last one that I can put because I think, yeah, I can get like 20 tickers on these. But some of them were pretty bad today, like sold off. But a lot of them still have their uptrends, you know, like even the ones that were down today. I added some other ones too, like this ARQT has a phase 3 for, I believe, psoriasis. And of course, a lot of these, they have interesting stuff in the pipeline, like, you know, they're trying to get approved. So this one, the Arcutis is, yeah, dermatology. So they've got one in phase 3. And actually, it says it completed phase 3 for plaque psoriasis. And they've got some other stuff in the pipeline too, hand eczema. Yeah, so this one was really strong today, and of course, a lot of these haven't done well over the past because they're biotechs and they tend to never do well for long, especially those small cap ones at least. But the technicals today are interesting because it kind of did that shooting star yesterday, then today it did this hammer. So that's the uptrend right there, and it's looking pretty good. Just the way it acted today too. And the other one, the CLSD, there wasn't a clear level that goes back that far. Like it's just, I think just the uptrend is the best way to look at it, but because I was thinking there'd be a level that would go back, but it's been really choppy. So this one's up the past couple days too, and really nice chart, and that's the level that it broke of the resistance. So it's technically bottoming out because it broke over that high there. So it has really good technicals at the moment, and that was a heck of a move today, 12%. Especially on a day like today, which was risk off in the overall market. And we got the AKBA, GLYC. Yeah, this ACST that I found too on that day, on the spike, after the spike day. It's looking like a bull flag, a bull flag that is ready to go. I mean, you can see I just kind of look at it by the way it goes down. Like, there's no big spike down days, and it's just steady consolidation. So, I mean, this could keep up for, you know, another week or two if it can even play out if it keeps up another week. But if it breaks over like 290 or, let's see, we seem to wait for a break of that flag. So if it keeps going, of course, the break's gonna be lower. But if it goes tomorrow, it needs to at least hit like 285, 290. Well, the high there was 290. Yeah, so it needs like 291 tomorrow if it's really gonna go. So that one, I'm gonna put that one up toward the top of my watch list too, because the fact that it had that big move in the past, right there, that day I found it, it it could that usually means that it can do it in the future, basically. So that was kind of my thesis with the NKTX, because the NKTX had that big move back here in October, and I was like, well, it's uptrending, so it's got a good chance. So, but as I was saying, these biotechs, they can run and run and run, but then they stall out and they can come back a lot. And I'm gonna call this one as the run is stalled out, is done. So, I mean, the uptrend, even you draw it rough here, like that's roughly the uptrend. So even if you put it there or there, it broke the momentum. So kind of like the overall market today. And this thing has puts, so like I think it could come down a good bit. So it's got like the $5 strike were kind of liquid, like going into February. The February puts on the $5 puts were good or decent. It looked like a decent spread, for a pretty liquid option. But that's the problem with all these small cap bios I've been looking at. They don't really have a lot of liquid options, unfortunately, of course. But it's kind of but I've just been doing shares, and like I bought some MBRX today, and the APLT, that one moved a lot today too, but it came back. So yeah, that's enough on the biotech, because I think I got all of them there. But I just keep seeing these just keep showing up in the scans. So yeah, the ICCM was the other one. I did a tweet on this one. There's just a lot of these. The ICCM was up the past 3 days, while the market's been selling off. So the relative strength's really good. Of course, it's kind of in line with a lot of the biotech that are going up, but still, that's really interesting. And they have it's like an Israeli company, and they do cancer treatments where they like cryo freeze. They do like these freeze the tumors. So I guess I could see how that would be good for inoperable tumors, where they just freeze the tumor. I mean, I think they used to do that for prostate cancer. I think that was an option too, maybe. But anyway, that's what they do. They freeze tumors. So it's kind of interesting, and surely I put the facts on the Twitter, like the balance sheet's really good. They've got a balance sheet with a 4.0 current ratio, which is just their current assets over the liabilities. So, and the long-term debt, they practically have no long-term debt, because it's not even like, it's maybe less than 1% of like their total debt, or it's just a really small figure on their long-term debt. It's pretty minuscule, and they've kept it stable too. Like they're not they're not adding debt or anything, which is kind of interesting for a biotech company, because usually the balance sheets are pretty bad on these biotechs, or because they don't make money. So, but that's like an interesting one. And that kind of reminds me, I guess the last thing I'll talk about here with the biotech is this one that I found like a year ago or so, because if you don't know, I research deep value stocks, like nets and net current asset stocks that are trading for less than their quick liquidation value. And I guess it's kind of a long thing to explain it, but the gist of it is it's stocks that are low priced compared to their assets. So in theory, you could buy the whole company for less than what the cash and receivables and inventory is on their balance sheet, and you could sell it for profit. So it's basically, to me, it's always been kind of it's like the most clear and transparent and precise way to find an intrinsic value of a stock. So like people talk about intrinsic value, and they look at like they project multiples in the future and they project cash flows in the future and whatnot. It's always about the future, but I mean, of course, because it's a business. But if you can kind of narrow down and find tangible, well, another thing I look at is net tangible asset companies where they're trading less than their net tangible assets, which is just a little more. It just includes a little bit more on the balance sheet, but still, it's like a good deal. It's like it's kind of like getting it's I guess like to sort of quote like the old timey investors, you buy $1 for 50 cents or something. You're actually getting some assets when you buy it. You're not getting the hope of projected cash flows or revenue. So anyway, that's kind of the gist of the deep value investing. But so the one I found was this. They changed the name recently, which is probably a good thing because it seems more focused on their core business, because it was like just like a vaccine company, but now they sort of broadened their scope, so that's a good thing, I think. But the company was the ticker was VACC, and I did a blog post on it briefly like a year ago or so. Um, it's on the blog. It's on my stock pursuit. The VACC here, but basically I think it was right below net current asset value at that time. I guess this is probably weird scrolling through it, but yeah, it's probably give you like it's like you get motion sickness if I keep scrolling. But so I'll just talk about it anyway because I didn't really put a lot on the blog at that time. But the market cap is 369 million, and from my rough look at it, they had just a little less than that in um, net current asset value. So it's right above net current asset value. But you take you take the assets and you subtract the total liabilities. So you don't. I mean, of course, you have to. It accounts for their liabilities too, like their debt. So, but anyway, they kind of made me think about it because the way these medical companies have been going so far this year, like the biopharma and the medical devices and basically just all the medical companies, small caps. This one's a small cap too, so it kind of caught my eye as maybe getting some rotation coming into it. So yeah, the ARQT. No, it was the BRNS. Yeah, BRNS is the one. Yeah, I thought that number was long. I was looking at the wrong one. It's it's actually this one, the BRNS. They it's the net current asset deep value one. So it looks like something went on there, and I couldn't find the news on it back in September, but something big happened there, something positive. So this one's got a good chance, I think, of actually getting to a real valuation, less than or for more than what it is now, because it's so cheap now. It's basically selling for like a liquidation value. So, which a lot of these biotech do. I mean, a lot of them aren't worth that much, but the idea of looking at the assets is just it's oftentimes a good way to find really undervalued stocks. So that's enough on those. So I'm not like on the overall market. I'm not really surprised. It pulled back. Like I was saying, it seemed it's been short-term overbought for a long time. I mean, it was really getting overbought. Back in there and like middle of December. Um, it easily could have pulled back at the major levels. You know that because it did a double top, it had that double top that it broke over. So, but what they did was they seemingly here just they trapped a bunch of people buying the breakout again. So like they often do that, like especially even on the intraday charts, they if they're gonna reverse it, they're gonna get some fills, at the above the pivot point. So it's not surprising. These failed signals happen all the time. So I mean, I figured it was gonna retest and get choppy, but they um they just blew through it. So that's our trend support. So that's the next thing to watch and see what happens. So and that blue line's a level 2, so that's important to see what it does there because that's the most important um, trend line to watch because they can blow it out there, but as long as it holds an uptrend, it's still bullish. But we just have to see what it does. But at the moment, it looks like they trapped they trapped a bunch of people buying, so they very well could be a good correction here. Maybe it comes down. A lot of times, like corrections come down to about half of what they ran up, and I guess you could call that the like Fibonacci. Like I don't really know. I don't really use that, but I've seen it play out a lot where after a big run, in a stock, whether it's intraday or even on a longer time frame, after there's been a big run, the pullback point, the point where it stops coming down, is usually about halfway, like 40 to 60%. So, I guess if you want to call that Fibonacci, like a Fibonacci retrace or whatever, then yeah, that's fine. But so that's a big level there. That blue line is the next big level coming up. But to me, I'm just watching this trend support, and like a lot of stocks already broke through that. So like my kind of mindset now is just to start hunting for or just keep focusing on the weak stocks if we are in a kind of major pullback here, which it seems like it might be, since it blew through those levels. The stocks that have been weak fundamentally are just going to continue to be weak. Like I added on some more charge point holding puts, but I guess since I'm on Wayfair, we just go ahead and talk about that one. So the Wayfair, I just got a list of these stocks that, or at least like a list in my mind of these stocks that have been really, really blown up, in the past like 3 years, with IPOs, or the stocks just went up and they've kind of been inflated past their fundamentals. Like there's a lot of companies that did IPOs that shouldn't have done IPOs, and they just kind of took advantage of the cycle, in 2021. So I mean, there's a lot of companies that just don't make money. They're kind of just been riding the low interest rates in the past cycle. So there's opportunity on the short side on these struggling companies that have kind of not improved, and then their financing is even tougher now. So Wayfair is one of them, and it just broke through a down channel. Like I've always liked Peloton as a short, and it actually broke through some broke through some support there. Looks like that was actually, it lined up pretty perfectly with that. You can see when it when it hit the support level there. I just drew this based on the touch it, like it touched there and there. So that's the support level. So once it came back to the support level, it gapped down and then tanked. So it reacted pretty poorly off that breakdown. And there's some other ones too, but what I've managed to get into so far is the snap. I'm still in snap puts, and those are finally going pretty well. Looks like it might have tried to catch support there at that level. Like that 1550 held pretty well. So that's something to watch. I hopefully we get like another gap down or something, but it's trying to hold there, which isn't that great, but it's still a gap down, so the momentum really died back here when it broke trend support. Well, pretty much a rough trend support, even it broke, let's call it there. So that one is definitely in a downtrend. And yeah, the charging stocks, those things have been getting annihilated. I was kind of hoping for like a bounce today so I could put on tons of puts, but I mean, really the time to put them on was back here when they spiked. But of course, that's hindsight. But yeah, the CHPT is looking pretty bad. So I put on some 150 strike puts. I think January or February, and the BLNK was even worse today. Like it was down more, and it's coming up right on support now. It may just blow through it. We'll see, but it caught it pretty well last time. But yeah, that double top really played out here, and the EVgo is kind of doing the same thing. You know, it's coming down to support levels. And I don't have any puts on this one, and I think I cleaned out all my other puts on the other ones. I just have like a few strikes on the CHPT, but yeah, I mean, these all look really broken again. Like, trying to find an uptrend here. It's kind of messy, but that's kind of like an uptrend, but well, because it caught there and there, but it didn't even really get much momentum over that level. So these are my levels on this one. So if it breaks through that 290, like it's gonna hit 2, I think. So, and the EVgo actually they've had better revenue growth than a lot of them. Like in the past, their revenue was really good. It's like 100% a year, but the sentiment on these, it just kind of died out. Like with the EV market kind of slowed down, or at least the sentiment, because it was just so strong before. And kind of curious what Tesla did too today, because my thesis on the charging stocks, and I put that on the blog too, on my stock pursuit blog. It's actually my last one that I did in November. Yeah, I got my EV charging stocks short thesis. So it's kind of some of my points on it, on the charging stocks. And of course I put this out right when the market rallied, but that doesn't change the short-term movements don't really change the future, so the underlying fundamentals. But Tesla just broke. Yeah, I was wondering what it was gonna do because it came right up to that. This is the channel or the trend support right there. So it tried to hold trend support yesterday on that hammer. It tried to come back up to it because it did the same thing back here. Like it broke through this uptrend and then that's where it quickly reversed. But tried to do it there and just couldn't do it. And of course the market sell-off is obviously it's pretty high beta, so it's a high beta stock, so it's going to sell off with the market. So yeah, it's just can't get away from the market either. So that's a big level it tested there because it's got this down channel. It's got this down channel resistance, and it looked like it was going to break out, from that down channel, which is really bullish. But then it's a failed signal if it comes back down through that. If it comes back below that, because the sentiment turned bullish, on that down channel break, but that was like a huge trap, of course with the market also. And looks like bonds are actually up today too, which see it loves to trade in those ranges like that. That was the channel there. On this channel, I mean, it caught support. It looked like it caught support there, which is interesting because it may just continue. So if we break above that flag there, but it looks like it might try to test it again, but it looks like it could easily just keep breaking out, keep uptrending. So I think I covered about everything I was thinking about. And the hood was a good one too. I talked about that in the other video. I just didn't make any trades today. Like I wasn't even at the computer, but the hood was down a good bit today too off of that failed signal, and the momentum's cracked on it too. But that's kind of the story with the market. Like I was looking at my gap down scan, and pretty much every stock or the gap downs were incredible today. My gap down scan had 70 hits today, and like the other day it had 4 on the when the market was going up. And I kind of been able to read. I can read the sentiment here. It's just really switched, and these gap downs it's usually like a really strong signal when there's a gap down. I suppose the futures market just gapped down a lot overnight or in the morning in the pre-market. And the Nasdaq wasn't even that big a day, but the small caps were down like almost 3%. So I was kind of wondering what happened, like why it gapped down so much. I think there was some downgrades. I think Apple was downgraded yesterday or pretty recently, and it looks like there wasn't a gap down in the futures, unless this is wrong. But it's kind of funny how everything gapped down. Because literally, like all these stocks just gapped down today, which is pretty strong, pretty strong bearish move. Like gap downs are strong. So, of course, the futures don't look as ominous. It's actually coming up. It hasn't even tested trend support on the RTY on the Russell. And the XHB just broke through that trend support. It's really like a failed signal because that triangle was perfect, like the breakout. The signal was there, so it just failed. So there may be some opportunity on the short side on these on home builder stuff. Nails the 3 times bull. So when I used to day trade, you can get a ton of alpha taking the opposite side of the levered ETF. So this ETF is up 3% or 3 times the underlying, but it's not really an XHB. It's more like it's a suppliers too, but supplies. But like these things, like so this one was down. The bull ETF was down probably like probably at least like 6 or 7%, right? So they'll usually be down more than the bear ETF. So if the bearish ETF was, up 6% or 7%, these tend to have a tendency to have even more of a move. So it might be like 10%, just because it's the way it's like inverse. I don't know exactly sure why that works out, but I've seen it happen a million times. So if I was gonna day trade, I would probably short scalp this one this week or next week, because if it does sell off, this bull ETF is going to have more percentage move than the bear ETF. I'm not even sure I don't know if there is a bear ETF for this particular underlying, but I think there might be one for housing. But anyway, this could be a good one to trade. And even the Russell, trying to think of the tickers off the top of my head. The TZA is the bear Russell, so it might actually be up more than the bull. I don't know if I kind of I was like trying to do the inverse of all these things, so it's kind of confusing. But I think actually the bull one would be better if you shorted the bull one, is what I meant to say. So, and the bull one's TNA. So yeah, so TNA was down. Let's just test my theory here. Like, I could be wrong because it's just one day, but it's kind of a long video. I guess there's like a couple of you probably that watched the videos, but I try to keep them short, but this doesn't really. It's not easy to do. So TZA. Yeah, it can't be right. I think it's got to load. Oh yeah, there it is. Yeah, TZA was up 8% today. Yeah, and TNA was down 8.26%. So yeah, the bullish ETF TNA was down more than the TZA was up, percentage wise. So there was like, about 1/4% difference. But sometimes that can be a lot more. Like what I've seen in the past, it can be like 1 or 2% at the most different. So the TNA might have been down, or it may be down in the future, like 9 or 10% a day when TZA is up 8%, if that makes sense. So that's just kind of one of the tricks I learned. You learn when you trade stuff a lot, but yeah, I'll just continue to keep looking for where the momentum is, and it seems to be in medical right now, and like there may still be a lot of good opportunities on the short side, especially in these charging stocks, and I'll just keep watching everything, and I'll put stuff out on Twitter as usual if I find anything interesting. So I'll end it there, and catch you next time.